Hello and welcome to the market update video with me, David Madden. It's been a pretty volatile 24 hours in the markets, as last night the Federal Reserve hiked interest rates by 75 basis points, meeting expectations. And the US Central Bank also issued quite a hawkish update. With that, we've seen a broad sell-off in US and European stock markets. This morning, the Bank of Japan intervened in the foreign exchange market for the first time since 1998. The Bank of Japan bought Japanese yen in a bid to support the currency, and as a result, we've seen a major rally in the Japanese yen across the board, and conversely, we've seen a huge sell-off in the US dollar. A few hours ago, the Bank of England hiked interest rates by 50 basis points. Going into the meeting, there was some speculation that the Bank of England might hike by 75 basis points, but in the end, only a hike of 50 basis points was delivered. Out of the 9 members of the Bank of England's policy committee, 5 actually voted for the hike of 50 basis points. So there is clearly some division at the Bank of England. And as a result, we have seen a broad increase in sterling in the last few hours, but no major rally seen in the British pound. Turning our attention to oil, oil continues to show strong gains because of uncertainties and fears surrounding the heightened rhetoric out of Russia. Traders are fearful that demand levels might be impacted.
USD JPY has been trending aggressively lower recently in the wake of the Bank of Japan's intervention. If you take a look at the MACD indicator, we can see that momentum is in negative territory, implying that the bears are in control. Looking at the RSI, we can see it's moving lower, suggesting the price bias is to the downside. While the currency pair continues to hold below these 3 simple moving averages, it's likely the recent downward trend will continue. A move lower from here could see it retest 139.90, and a break below that could see a target 139.05. Even though the short-term trend for the currency pair is lower, it's worth noting the much longer-term trend for the currency pair is higher. If USD JPY can manage to hold above this zone here at 139.90, that could be another indication that the longer-term upward trend is still in effect. If we do see a rally in the currency pair from here, it might encounter resistance at 142.07, and a break above that could see a target 143.38.
Turning our attention to the silver, the metal is up over 0.8% as a broad decline seen in the US dollar is driving up the industrial commodity.